Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. Today is Tech Tuesday, but discussing Paulson's rescue plan is a major focus. My first blip looks at Apple Computer, which was my stock of the day in the new Value Engine morning briefing. On recent share price weakness to 120.68 last Thursday, Apple showed up on valueengine.com with an upgrade to buy from hold. Fair value is 183.69, which makes the stock 28.7% undervalued. Apple was added to Richard Suttmeyer's sector report model portfolio at 129.25 Thursday morning, and I was looking to add to the position on weakness to my monthly value level at 120.15, but was unable. As long as the stock maintains its buy rating, I show upside to my semi-annual risky level at 164.16. As long as the stock remains a buy, I show, and I will, add to the position on additional weakness to my annual value level at 112.37. This is the buy and trade strategy that I advocate in the sector report. Notice that the daily chart shows lower highs since failing above 200 at the end of 2007 as expected. The stock is oversold on its daily chart with the 12/3 slow stochastic below 20 on a scale of 0 to 100. The 50-day and 200-day simple moving averages are converged at 161.69 and 161.61. If you want information on either of these subscriptions products, Richard Suttmeyer Sector Report and VE Morning Briefing, send me an email, gmcreports@aol.com. My second blip looks at the potential price tag of the Great Credit Crunch. We've had the $165 billion economic stimulus plan. That was supposed to create 500,000 new jobs. Instead, the economy has lost jobs in every month in 2008, with the unemployment rate up from 4.7% to 6.1%. Then we had $29 billion for Bear Stearns. An alphabet soup of credit facilities were created to protect investment banks, but not used for Lehman, a 158-year Wall Street firm. Then we had $200 billion backstop for Fannie and Freddie. The mortgage securities debt are now U.S.-backed, which adds $5.4 trillion to our national debt, now at 5.4 plus 9.5 equals 14.9 trillion, and growing, and well above the 10.6 trillion national debt. Next, $85 billion for AIG. Now we're talking about $700 billion and counting rescue of the U.S. capital markets. Another plan to help Wall Street while community and regional banks on Main Street are lined up to fail. Solutions seem to be trial and error. Don't forget, effective October the 1st, there's $300 billion for HUD to help homeowners. That becomes effective October the 1st. To qualify, however, the homeowner had to have had his mortgage originated between January 2005 and June 2007. Then we had $50 billion to back up money market mutual funds. Sum this up and you get $1.53 trillion and counting. My third blip lists again the loans on the FDIC quarterly banking profile where more bad loans will come from. Credit card debt has surged to nearly $1 trillion. Home equity loans have surged to $647 billion. Commercial real estate loans known by the FDIC quarterly banking profile, non-farm, non-residential, that ended the second quarter slightly above $1 trillion. Construction and development loans declined slightly to $627 billion, mostly because of failed loans and defaults. But there are 2,500 FDIC-insured banks overexposed to this loan type. Notional amount of credit derivatives totals $183 trillion among the FDIC-insured institutions, and that was at the end of this second quarter, up 0.9% sequentially and 18.4% year over year. That's where more bad loans and structures are now hidden below the tip of the iceberg. My fourth blip comments that the rescue plan changes all financial rules of the game. The plan will not make bad loans solvent, and known bad loans are the tip of the iceberg. Not shown in these figures above anywhere is the resets that started on $1 trillion in Alt-A mortgages, and defaults on these loans could exceed those from subprime structures. There's no way to say that the Paulson rescue plan will work, but it will take years, not quarters, to find out. My special report covering the Great Credit Crunch offers a better plan and lists problem banks. If you have any comments or questions, shoot me an email, gmcreports@aol.com. That's today's 4 and 4. Enjoy your day.